All right, welcome back inside our proactive newsroom. And joining me now is Scott Klimo. He is the Chief Investment Officer for Saturna Capital. And Scott, it's great to have you back. How are you?
Very good. I'm doing really well. Thanks for having me on again.
Yeah, excited to talk a bit about what's going on as far as this Islamic investing and the ETF. And it's very unique and very interesting. And maybe it's a good idea for you to sort of give people an understanding a little bit about it.
Sure. I think the first thing that we'll start with is that Saturna Capital is the largest manager of Islamic compliant assets in the United States. I suppose I can see that you're in Vancouver, so in North America. I'll go that far. Um, we've been managing Islamic compliant assets since 1989, since the firm was founded, so 36-year history of doing so. And we have approximately $8 billion under management. A few years ago, we decided to launch an ETF, an Islamic ETF in European markets. And so we launched the Saturna Al-Kawthar Global Focused Equity UCITS ETF. Could be a shorter name, but there you go.
Mhm.
And the thing that's really unique about it is that is actively managed. So there are Islamic vehicles that are available to investors in Europe, but they tend to be index products tracking one firm's benchmark or another, be it MSCI or Dow Jones or whomever. But our ETF is actively managed, and that does set it apart within the marketplace.
So explain to us what it means when for Islamic approved companies. Like what sort of companies are you looking at?
So there are a number of qualifications, I guess we can say. Some of them are quantitative and some of them are qualitative. People are probably pretty familiar with most of the qualitative restrictions. So there are various activities that are prohibited. We will not invest in companies that are engaged in alcohol, tobacco, gambling, weapons, pork, of course, any sort of adult media are all banned. And additionally, apart from that, actually the largest segment of the market in which we do not participate is conventional finance. Due to the prohibition in the Quran on usury, we do not engage in companies that are involved with interest, either paying or taking interest. So banks, insurance companies, things of that nature are also prohibited from inclusion. Then there are a couple of quantitative restrictions, and really the most important one is just that we limit debt. So we will not invest in companies that have greater than 30% total debt to market capitalization. And that's just it's a number that Islamic scholars around the world have kind of come up with as let's call it a compromise. I mean, we recognize that debt is part of the world of the economy, and
Mhm.
if we're going to be able to invest in equities, we have to have some allowance, but it's a pretty low allowance.
So that would leave, I would imagine, a lot of companies out there to look at. So can you sort of talk about some of the ones that you can share with us that you think are really fit nicely into what you're doing?
Sure. So, I mean, it is a significant thinning of the universe, shall we say. So we use a data aggregation service, and we pull in about 5,000 stocks on a monthly basis based on market capitalization and liquidity. And we run those stocks through our Islamic screens. And of the 5,000, roughly 2,400 will pass as being Islamic compliant. And so what do you end up with? You end up with a lot of technology stocks, pharmaceuticals, industrials, consumer discretionary. A lot of consumer discretionary is fine, some of it not so much. Consumer staples, of course. Various materials companies, mining, that sort of thing. What you don't end up with, and apart from the restrictions that I mentioned earlier, the debt aspect of it really tends to screen out the majority of things like utilities, telecommunications, a lot of real estate, things of that nature get screened out. But it still gives us the opportunity to have a diverse and I think well-rounded portfolio.
And is that because it's so narrow and streamlined, is that an advantage when you're putting together something like this? Do you look at it as an advantage?
Well, we look at the screen itself as an advantage. Traditional or conventional financial theory would say, well, if you're reducing the size of your universe, you're reducing your opportunity set and you're diminishing your ability to outperform. In our view, by getting rid of the most heavily indebted companies and also ones that are engaged in risky activities like alcohol, tobacco, gambling, etc. We're actually creating a pool of stocks that are predisposed to outperform in a variety of markets. What we typically find is that they provide very good downside protection. So during times of market disruption, our funds tend to provide that sort of downside protection. And in times of very buoyant markets, we might lag a little bit. But generally speaking, we're over the entire cycle, it's going to work out pretty well.
Okay. And lastly, just on the sort of the global allocation of are you able to search out companies around the world, or do you specifically look for as you just the North American companies?
Right. So the fund is a global fund.
Yeah.
And one of the things that we are looking at and have been shifting toward is, we've had this period of so-called American exceptionalism, which has reflected actually exceptional returns from the stock market in the United States relative to other countries. I think there are a number of arguments that say, that's not something that we should expect to persist indefinitely. And so we do have about 40% of the portfolio exposed to companies in Europe and Japan, other places. And that's a ratio that we may actually look at expanding because certainly if you look at valuation, overseas valuations are significantly more attractive than US valuations. And in some ways, things think there is a thing such as mean reversion. And perhaps it's one of those times that over the next couple of years, we'll see the international stocks do a little bit better, as they have done in the past.
Pretty exciting stuff, Scott. Very interesting as well. Look forward to following the ETF and what you're doing. And I really appreciate your time today. Thanks very much.
Thank you for having me on.
Yeah, good stuff. There's Scott Klimo. He's the Chief Investment Officer for Saturna Capital.